In today's lesson, we're going to talk about preparing financial statements. We're going to use the Chapter 2 exercise, or Chapter 2 exercises. We're going to look at exercises 8 and 9. For exercise 8, it says, Moonlight Drive-In Theater had the following accounts. They list the accounts and they give us the amounts. We have to complete a chart showing the account type and financial statement for each account. That's the first thing that we need to do. When we say account type, we're talking about 5 basic things. They are asset, liability, equity, revenue, and expense. Do you remember how we distinguish those? Assets are something that we have our own. So is there anything on this list that we have our own? Of course there is. There is cash. Cash is an asset. Land is something we have, so that's an asset. Accounts receivable is money we're going to receive from customers in the future. It's a promise to receive money in the future, so that too is an asset. The next thing we need to look for is liabilities. How do we distinguish liabilities? Most often they end in the word payable. So we will look through the list and see if we see anything that has payable in it, and there we do. Accounts payable. That is the only one, so that's going to be my liability. Next, we have equity. We have 3 accounts that we are learning in equity right now. Common or capital stock, retained earnings, and dividends. So let's see what we have. We have cash dividends paid. Good, that would be an equity account. We have common or capital stock, which is also equity. And we have retained earnings. Those are my equity accounts. Next, we have revenues. Revenues, you'll see, most often end in the word expense. One exception is unearned revenue. Unearned revenue is a liability account because we have received payment, but we haven't done the work, so we owe them work in the future. So anytime you see unearned revenue, it's always a liability. Any other time the word ends in revenue, it's almost always a revenue account. The last account type is expense, and it too, most often, the accounts will end in the word expense. So we'll just identify everything else as an expense. We have everything mixed up between revenues, assets, liabilities. It's going to make it a little bit easier if we can sort it. So I'm going to sort it in the order of asset, liability, equity, revenue, and expense. Now we have it sorted into asset, liability, equity, revenue, and expense. We want to do our account types in that order because it's going to make doing financial statements easiest. When we do financial statements, we always start with the income statement. The income statement lists our revenue and expenses. So we need these accounts here. So these are all going on the income statement. Our equity accounts, retained earnings, is in 2 places. It's on the statement of retained earnings and the balance sheet. Our assets, liabilities, and equity accounts will appear on the balance sheet. Dividends will appear on the statement of retained earnings only. So dividends will appear on the statement of retained earnings only. All right, so we're looking at these accounts. These accounts are our income statement accounts. We have 2 revenue accounts and the rest are expenses. So we'll start with our revenue accounts. Whenever you see a heading like this is a subheading with a colon at the end. That means we don't put anything in there. We're going to add things below it. So below it, I'm going to type in ticket revenue. My ticket revenue is $180,000. I have concession revenue, which is $29,600. Total revenues would add those together, and I would get $209,600. Next, I come to my expenses. Again, I notice there's a colon at the end, so that means I won't enter anything there, but enter it below. So below, I'm going to put the equipment rent expense, the film rent expense, the advertising expense, the salaries expense, and the utilities expense. I'm going to go and get the totals from here. I've already put in formulas so that it will automatically add the totals. If you're not familiar with formulas in Excel, you might want to get that. Refer to the Excel spreadsheet tips that I've given you. It should be in our class folder if you didn't receive a physical copy of it. To get net income, remember we take our revenue of $209,600. We subtract our total expenses, and that gives us our net income. Net income will be $13,500. We will need that $13,500 for the statement of retained earnings. I'm going to put a block in here so we can still see our chart. So now we're going to go down to our statement of retained earnings. The statement of retained earnings starts with the beginning balance for retained earnings. The beginning balance is the balance at the start of the period or the end of the last period. In this case, we're doing a statement of retained earnings for the month of June. So we're looking for the retained earnings balance at the beginning of June or the end of May, whichever they give us. And in this case, they're going to give us the retained earnings on June 1st. It's $121,800. So we're going to put that in. To retained earnings, we always add net income. Net income we get from the income statement. So we're just going to bring that total down. And that's going to be $13,500. We could add a total in here if we wanted. It doesn't really help us in any way, but we can put it in there if we want. It doesn't give us any additional information that we wouldn't already have. Then from retained earnings, we're going to subtract any dividends. You are clearly looking for the word dividends, right? If you don't see the word dividends, then it's not a dividend. So we have cash dividends paid of $12,000. So we're going to subtract our cash dividends. Remember, dividends are earnings of the company given back to the owners. So I'm going to take my beginning retained earnings, I'm adding net income, and I'm subtracting dividends, and that's going to give me the June 30th ending retained earnings of $123,300. I need that total for the statement of retained earnings, or from the statement of retained earnings for the balance sheet. So we're going to take this total, and we're going to move it down here. This is where we're going to put ending retained earnings, which is going to be the $123,300. So now we need our assets. We know that we have done account types that are going on the balance sheet. We have cash, accounts receivable, and land. We have cash at $140,000. We have accounts receivable at $36,900. And we have land at $148,000. Again, I've added a formula in here to automatically calculate total assets for me. For liabilities, we only had one, which was accounts payable. Accounts payable, up here, we can see $87,600. My common stock or capital stock account is $114,000. And then we have the ending retained earnings, which we calculated from the statement of retained earnings, and that gives us the balance to the balance sheet. Remember, our accounting equation is assets equal liabilities plus equity. Those balances must agree. So now you can see what the three financial statements look like. We have the income statement, which show the revenue minus expenses to get the net income of the company. The net income is transferred to the statement of retained earnings. The statement of retained earnings takes the beginning balance, it adds net income, and it subtracts any cash dividends to get the ending cash balance, or the ending retained earnings. The ending retained earnings gets reported on the balance sheet as an equity. We list the assets, liabilities, and equity to prove the accounting equation and prove assets equal liabilities plus equity. Next class, we will learn more about how these balances are created. See you then.